Goldfinger Group is live. We are live.
We're in it to win it.
In it to win it. We're live. Goldfinger Group here, and we're here to talk to you today about building an investment portfolio. So today we're basically going to be talking about different people have different approaches to investing strategies, how they diversify their portfolio, and that's the topic of discussion today. Let's get into it.
Yeah, let's do it. I think the first thing to say is we're not wealth management advisors. I can't tell you how much you should put in the stock market, where you should put it, how much should go into bonds, how much should go into real estate. But what we do know, we do know real estate,
right?
At least Los Angeles-based real estate, and we know how to look at LA real estate and look even deals across the country. We can look at them and see returns and see 5-10 year projections and understand them. Now, we're not investing in other markets, so specifically we do understand the LA real estate market. And what we like about real estate specifically in LA too is they're stable assets. These are long-term growth. There's some cash flow. They appreciate so much over time. If you look at LA real estate 50 years ago versus today, you'd be like, why didn't I buy everything 50 years ago?
Right. It's basically, look, there's no such thing in investing as no risk. There's no such thing as a sure thing. But when you look at the track record of Los Angeles real estate, if that's any indication of the trajectory, it is a low risk investment where if you know what you're doing, you can achieve high returns. And so that's why we focus on apartments. That's what's attractive about apartments, is that people always need a place to live. Right now, as we saw in the pandemic, as much as it's true that everyone needs a place to live, there's this eviction moratorium that's still going on locally. We never thought when we bought buildings a couple of years ago that we'd ever encounter such a thing. So, like I was saying, yeah, there's no such thing as a no risk investment. But if you look at the track record of Los Angeles and where the direction that it's going, the inherent value that we have here, of the weather that we have 300 beautiful days a year, people, especially in our experiential generation, people are trying to get the most out of living, out of experiencing life to its fullest. We really believe in Southern California living. And so that's why apartments are attractive to us. Back to the question of how much should you be investing in Los Angeles real estate, Los Angeles apartments? So it all depends. It all depends on the person. And there are different people have different competitive advantages depending on what line of work they're in, what stage of their life they're in, how large their portfolio is, and there's plenty of other factors that can determine people's personal investment strategies and decisions.
And specifically, you've done recently some transactions where people have sold their buildings and you've actually helped them get into triple nets because they're looking for different investment goals. And I think that's the number one thing is establish what your investment goals are. Are you looking to build equity? Are you looking for cash flow? Are you looking for the combination of both? I know for us specifically, we're fairly young, even though we act like we're old.
He's young.
But we're in it for the long haul, right? We see, like we said, if we could have bought every property in the 1960s and 70s, we would have. Just like today, we're hey, let's buy right. Let's own for a long time. Let's build our equity positions. Let's refinance these properties, pull equity out, and continue to buy and own portions of properties. And I think the big thing is that this takes so much time and energy.
Yeah.
It's not easy to negotiate the contracts, understand the markets, get the financing, have the equity. I mean, that's one of the biggest barriers of entry for a person on their own to own real estate is needing $500,000, $600,000 just to buy one asset.
Just to get in the game.
Just for one property. Now you could go to some of these higher risk markets and go in with only 50 to 100 grand, but you're not getting the stable long-term proven location that LA provides.
Right. So as Max said, we are not financial advisors. That's not what we're here to do. We're not here to do people's financial planning. But when people do come to us and they say, hey Elijah, hey Max, hey, the Goldfinger Group, I have, let's say, $1 million in cash that I'm looking to deploy into investments, right? And I saw your guys' Instagram Live, right? So how much should I put in? I see you guys are buying a deal. I'd like to get into the deal. How much should I put in? And so like most things, we'll say, well, it depends. Let's talk about this $1 million, right? How do you want to break it up? How aggressive are you? Are you chasing yield? Are you chasing cash flow that you need to get on a quarterly basis because you're going to be using that money to live off of? Or are you looking at this more as a longer term investment where are the write-offs helpful? Higher construction costs in a deal, is that going to be helpful for the person? So we really look into a lot of, we dive pretty deep into each individual investor's goals and really try to understand what those goals are and how we can help them get to achieve those goals.
Exactly, and I think the two things on top of that are is, if, let's say you have $1 million, we don't want to take all the $1 million, because then if something happens, like you need some cash set aside in case, God forbid anything happens to you. So we always tell investors is like, hey, make sure you always have money in the bank, because specifically with real estate, it's not a liquid asset. You can't just turn around in 10 minutes and say, hey, sell everything and cash out.
Unless you want to sell to us. Sure.
Yeah, and then I think the second point of that is like it's an opportunity to diversify. You can get into 5, 10 assets, and that's usually what we say is, I tell myself this, my own family who invests, friends who invest, it's like, hey, get into this deal, put a piece here, put a piece there, and see how it all averages out. Like ultimately, not every deal is going to be a home run. Some are going to be singles and doubles. Some are going to be grand slams. But if you average it out, you're de-risking your investment portfolio.
Yeah, there's certain deals that we've bought in the last couple of years that I look at certain deals that I thought were, this looks like a double and it's turning out to be a triple or a home run. And then there's other deals that we looked at and we said, wow, this is like, this is going to be a homer, and we barely, ran into first or second base, or barely, so that's why diversifying is so important, because you're spreading the risk around. Instead of putting that $1 million into one deal, you can put $100,000 into 10 different deals. And there's certain deals that different investors, certain investors will say, I want to put my deal into the deal you're buying in Mar Vista, but I'm not going to put it into the Echo Park deal, right? So, that may be because someone lives on the west side and they want to feel, they want to know that they can drive to the property to see what's going on, and they don't want to have to schlep to, downtown to see a project over there. They want us to do the schlepping, which is what we're here to do.
Exactly. And I think, what somebody needs to assess, right, is you may have like a stock portfolio advisor, because you don't have the time and energy, right? Like if you're a lawyer and you're billing $350 an hour to your clients, well, the time that it takes to research real estate, call it, and buy an asset, it could take 20 hours a week. It's over $300,000 a year. So it's like you might as well be working as a lawyer and invest with somebody, let them do all the work because they understand what they're doing, and then you're also de-risking yourself, right? If you only buy one asset, that asset doesn't work out or something happens with the property, like you're on the hook 100% for it.
Yeah, the first couple deals that I invested in as an LP, as a limited partner, as an investor, and these were deals that I actually sourced as a broker and sold them to my clients and invested my commission into those deals because I needed to learn the process, right? I needed to get to get my feet wet, and the best way to do that is by investing with someone who knows what they're doing, so you can really understand the process. And then once you've done a couple of those, you can get more aggressive and get your hands dirty. But like you're saying, the guy who's a lawyer or a surgeon or whatever their job is, whatever their career is, the amount of time that we spend on these projects, a lot of people have to look and say, okay, what's my opportunity cost, right? Am I really trying to get into real estate full time, or am I trying to be a lawyer, be a surgeon, and invest with sponsors who are taking the time to source the deals, deal with the financing, reposition the assets, do all the construction, etc.
Yeah, exactly. So I think, our summary of, how do you build an investment portfolio? I think first, figure out who you are as an investor, like what type of yields, IRRs, returns, whatever you want to call it, whatever you're looking for. Are you looking to get like a quarterly check every month with no appreciation, right? These trade-offs. I think understand, well, what's my capacity as an investor? Like how much money do I have, and how diversified do I want to be? Where do I want to invest? Who do I want to invest with? And look at it from that perspective. And I think the big thing for us, and I can't stress this enough, is like the location of LA, the proven track record that LA real estate has had, since it started, in the 20s, 30s, and over the past 5-10 years, how the market's been performing.
Yeah, and again, we're bullish. We're doing deals, we're finding deals, we're taking them down. If you'd like to be a part at all, feel free to reach out at Elijah Korobkin at the Goldfinger Group or Maxx at thegoldfingergroup.com. But first, let's check to see if there's been any questions.
Oh yeah. No questions yet.
But there's no questions.
Well, like you said, you can always reach out.
You can always reach out, but we must be doing such a great job. No one had any questions. Okay, or no one's watching. One of the two. Anyways, thank you for watching, and we appreciate it. We look forward to hearing from you and meeting with you soon.